Let us start the 28th problem of branch accounts where goods are sent at invoice price. 2014 question paper. Nishal Traders has a branch at Mysore. Goods are sent from head office at cost plus 25%. It's nothing but cost plus 1 by 4. So if it's cost plus 1 by 4, you need to take 1 by 5 on sale. So 25% means 1 by 4. So it's 1 by 4 on cost. So you should take 1 by 5 on sale. The branch also purchases goods independently from local parties for which payment is made by the branch itself out of its collection. The branch is advised to deposit the cash periodically into head office bank account. From the following particulars, prepare Mysore branch account in the books of head office for the period ending 31/3/19. So provide depreciation on branch furniture at 10% per annum. So depreciation on branch furniture needs to be deducted from the closing furniture. So we have opening balance sheet as on 1/4/2018. Branch petty cash 20,000. It's called opening petty cash debit side. Branch debtor 2,50,000 is nothing but opening debtor debit side. Branch furniture 4 lakh is nothing but opening branch furniture debit side. Then we have branch stock. It's called opening stock. So goods sent by head office 2,40,000 debit side. Direct purchases 1,60,000 debit side. It means that out of goods sent by head office 2,40,000 is opening stock. Out of direct purchases made by the branch 1,60,000 remains opening stock. Then cash sales 4,50,000 will come in credit side. This amount needs to be remitted to head office. Credit sales put into mark, it will not come in branch account, it will come in debtors account. Direct purchases 4,50,000. It means whenever you purchase you need to pay. So deduct this payment from the cash payable to head office. So students, what generally you pay to head office? You pay cash sales, cash received from debtor to head office. So before you can pay the head office, deduct this amount so that you can pay this for purchases, and net amount is payable to head office. So 4,50,000 should be deducted from the amount payable to the head office. Returns from customer to branch is nothing but sales return into mark. It will not come in branch account, it will come in debtors account. Goods sent to branch at invoice price. So it's called goods received by the branch debit side. Cash sent to branch for petty expenses. So this is a cash received by the branch debit side. Bad debts 10,000 into mark. It will not come in branch account, it will come in debtors account. Discount allowed by the branch to the debtor will not come in branch account, will come in debtors account. Cash received by the branch from debtor. Whatever cash you receive from debtor should be paid to head office. Branch cannot keep the money with itself. So this amount will come in credit side. Branch salary and rent paid by head office is an expense debit side. Petty expenses paid by the branch manager 35,000. Students, it is called petty expenses paid by the branch manager. It says expenses paid 35,000. So this should be deducted from the opening petty cash so that you can able to find out the closing petty cash. So next, balance as on 31/3/19 is nothing but closing. So closing petty cash you should find, closing debtor you should find, closing branch furniture you should find. So students, how to find closing petty cash? See students, at the beginning you had 20,000 in your hand, plus you received 25,000 for petty expenses from the head office. 20,000 you had, 25,000 you received, totally it's 45,000 minus petty expenses paid 35,000. So it's 45,000 minus 35,000, you get 10,000. So 10,000 will be the closing petty cash. So you need to find a closing debtor by preparing debtor account. Then deduct depreciation from opening furniture, you get furniture closing value. Then we have two branch closing stock. One closing stock is out of goods sent by head office. Another closing stock is out of direct purchases. This is how you calculate closing petty cash. You had 20,000 at the beginning opening, plus you received 25,000. So you had 25 plus you received 25, totally you get 45. Less petty expenses 35,000. So you get net 10,000 as closing petty cash. Account students to balance brought down. Next to credit sales, by cash paid to creditor, by discount allowed, by sales returns, by bad debts. So closing debtor is 2,40,000. Branch account students to opening petty cash, opening stock received from head office, opening stock out of direct purchases, then opening debtor, opening furniture, then goods received by the branch office, then branch office have received 25,000 for petty expenses and another salary and rent 30,000, so debit all expenses and losses. Credit side by bank indicates payment by branch office to head office. Cash sales 4,50,000, debtors 12,50,000, so you get 17 lakh. Less direct purchases, because whenever you purchase you need to pay this amount. So catch this amount, remaining you pay to head office. So you need to pay 12,50,000 to head office. No goods are returned by the branch. Then we are closing stock out of goods sent by head office. Then we have closing stock out of direct purchases. Then closing petty cash. Then closing debtor. Closing furniture, as you know students, opening furniture minus 10% depreciation, you get 3,60,000. Next you need to find stock reserve on opening petty cash. Opening stock 2,40,000 into 1 by 5. And then goods received from the by the branch 6 lakh into 1 by 5. You get 48,000 and 1,20,000. Again you should find closing stock reserve 1,80,000 into 1 by 5. So you get a net profit of 5,67,000. Any doubts? Call me students. Thank you.